we had this idea that, well, if you look at education in Denmark, nobody could actually take a course in entrepreneurship. That might actually be a good idea. So we had this Federation for Entrepreneurship, we had all of these changes in legislation, so now you actually have to offer these courses, and now, I don't know, 12% of all students every year take courses. So we have all of this macro pull towards making it better. And it also seemed to be better in all our data, but still we have this problem, as Peter very nicely spoke out. And I really spend a lot of time reading a lot of literature. I mean, what is the solution to it? And I think my reading of the literature is that if you want to have success, you need to have success. So I think that's actually what the literature boils down to. And the problem is, of course, is then, okay, how do they get successful in the first time? And the answer is, of course, you can't create that. That happened by chance. And for some reason, I really find that as an unsatisfying answer, because I know there is a way to sort of take Danish in this bad equilibrium and pull it up there and then have success and then have more success. So the spiral, or whatever Peter called it, this is what we really need to work on. And that's also why we have been working quite a lot now on studying these ecosystems. Is there any way that we from the public sector can help start an ecosystem or help it work better? Not because we actually want to pump money into it, that's really not the point, we don't have that much money anymore, but it's more that somebody has to do something. And is there any way that we can play a role to getting the actors more together? And that is what we're working on right now in some of the projects that we're doing together with Peter. Just some reflection, I really find this stimulating on the equity. This is something that we've been looking into and we haven't had any idea how to sort of approach. I think I completely agree this is something we have to look into more in this country, because in Denmark it's very much that as an entrepreneur you go to your bank or you have your own money. I mean, this sort of that you can actually get money from other people and supply. I think this is something, if there are any legal barriers, I don't think there is, but I'm part of the top management team in the place where we actually make those laws. So I mean, we can easily check that. But because it is a very important issue, and I think this is something I really hope that we can push together either in this context or in another, because I do think there is a point here, because the banks are not going to lend a lot of money to entrepreneurs in the near future, not even in the...
And smart entrepreneurs should not take that
no.
money.
So I mean, there's something we need to change, and and whatever we can do to facilitate that process or help that, I think that would be very interesting to work into. And then this whole idea about sort of making into the canvas. We've been actually working also with the canvas for a lot of our other projects. So if you want to have money from Fornyelsesfonden or one of the other things that we manage, you actually have to make things based on that. So I mean, all the development in that, and if you can make that smarter, would also be extremely helpful to see from our perspective. But I think the most helpful part is actually this whole idea about having an accelerated program and trying to build a community around that. I think that is what I see to be some of the most interesting things.
Hello, my name is JONAS. I'm the founder of MeMover, and that's the next way you're going to move around the city in the future, all around the world. You have the MeMover outside. It's a three-wheeled step machine, or whatever you're going to call it. Anyway, this is my second company, so so I have a bad feeling about this. I started 4 companies, but otherwise just service companies. So this is my real second company, and it was a bit tough for me, so I'm still kind of in a grenade shock here. And we were asked some minutes ago to give some comments on what we heard today, and I was trying to basically, it's been extremely inspiring to listen to the speeches on everything spawns a lot of different ideas to me. But if I try to kind of boil down what I think is most important thing to make people be more entrepreneurial in Denmark, is what I can see. I've been calling myself different things for a number of years. I'm educated as an architect. I've been working as a designer. I've been then entrepreneur, and then I call myself innovator or inventor. And when you call yourself inventor for a long enough time, people come to you with all different kinds of, can I tell you this? You won't steal this, right? And people start telling you their golden eggs. And I think people have this idea. I think I'm Swedish, by the way. I think it's quite the same in Sweden. But they have this golden egg theory that you have this fantastic idea. And if someone hears of that, they can just still take it from you, and then it's gone. So they keep it. They collect these golden eggs. I've done it for a number of years. I have a lot, I have tons of them. and I don't do anything with them, and of course they're worthless. And I think that's the thing, we have to dissolve that image, because the idea is basically worthless. The idea of the meme mover I bought, that was kind of conjured in '98, and it's been in my mind for a very, very long time. I've been working with it since late 2008, and basically the idea is worthless as such. It's just all the work and the energy and the dream that you put into it that starts waking it alive. So I think that's one thing that we should that one should work with to destroy that idea of this fantastic idea or the fantastic entrepreneur as the idea maker with the innovation that's going to change the world, because that's not what's happening. And you're touching on it on different subjects all the time. That's really, really important, and I'm starting to learn that now after being an entrepreneur for 10 years, something like that. So it's a tough thing, but it's important. The other thing I think actually is, I have to respond on that, because we talk about Denmark being one of the countries in the world having most money, I don't know, at least more money than the US put into early stage businesses. And I think also that is a big issue, not the money as such, because I've been into that situation twice. I'm very happy for it. So we can have, the kids could go to, no. We can have a car and everything. That's very good. But I think that you very early in the process, when you do this, you go into a very asynchronous relationship with someone that actually is not your partner in the business. They're not sharing your dream, these seed capital things. Because they have this, that's my experience, they have some kind of targets they have to reach. They have a number of control mechanisms. So actually, in a lot of instances, you're antagonists. And that derails the business quite early from actually what you want to have. You want a partner that shares your dream. And that is the third point. I'm ready soon. But actually, I've been part of the Accelerate program, and that's actually what you're trying to do here. You're trying to get along with investors. With the entrepreneurs. And I think that's a very productive way. And being here today, it reminds me how good it was to be in the program. And actually, I think one should try to, when you started that program, it would be a real cool thing to kind of continue the relationship for a long, long time, to continue learning. That's the biggest takeaway for me today, the learning of doing business.
So today has been very academic, and academia and education is a lot about doing what's being told and being really good at that, getting some good grades. But actually the fun part of entrepreneurship is doing what you believe in. And that's not necessarily the same thing. And we've talked about equity. And to me, equity is the upside of loss. Because I could spend another year, or actually 5 years of my time doing, living inside of some other people's dreams, which to some is a nightmare. But I get paid, right? But if I choose to go my own way, or together with a team of brilliant people to actually create something, obviously I'm going to lose that money I could have, or travel or whatever education. I could spend my time on something else, so I'm losing that. But the beauty part of equity is that the equity is sort of what kicks this into reality and actually becomes an upside. And if it fails, hopefully I'm not ruined. But I will actually feel the weight of that loss. So that's the sort of the dilemma, right? But if I could just share with you 2 cases of how I worked with equity since 2006, and hopefully you'll make other mistakes, because if you screw up equity, you can only give it once, right? And then you can obviously dilute it over and over again. But you can only give equity once, so make sure you give it the right way. So in 2006, I was invited into a company that later became known as Issue, which is today one of the biggest publishing platforms in the world. It's in the top 100 in the US, and we built all that from Denmark, so that's actually possible. Don't leave just yet. You can actually achieve great things from here. But the idea was that there was one original founder who owned it 100% of nothing. It was just an idea. Ideas of, like you say, nothing. Really, ideas are nothing, You need to put them into other people's heads before they become something of worth, right? But the idea was that we would vest from the original founder until we got funded, right? So the loss I put in, I would get back in equity, and that was a pretty good idea, we thought at the time. And then we got funded, and then the vesting stopped, and you sort of froze the cap table, and obviously gave 20 or 30% to an investor, right? But two key learnings here, right? When I got invited into the company, I had planned 5 or 6 weeks in Sri Lanka. Obviously, I couldn't invest from Sri Lanka because I was going to be traveling and all that. And that holiday was awesome, but at the time, everything was so unreal. But turns out that holiday has cost me millions. And I didn't realize that, but there's another founder who started the same day as me, or when I was supposed to start. So he's going to take out more cash when we exit, hopefully within a year or two, right? One key of learning, right? So don't, if you really believe in it, forget about vacation, just start working, right? The other was that we're actually 4 founders, and things were going well. We were like 90% sure that we would raise between 8 and 9 million Danish crowns, close to $2 million at the time. That was pretty good. I would take that valuation any day from anyone again. But there was this 5th founder that we really wanted to get on board. He could have just been our first employee because he really wanted to join the company. But we say, hey, take this 5%, and actually, I think it was because he was due to 2 weeks vacation on a ski trip that he couldn't cancel. So take this 5%, just forget about the skiing trip. And half a year later, he wasn't with us anymore. So we gave basically 5%, for nothing, right? So that's the downside of this type of vesting scheme, where actually the vesting period is really short, and once you sort of convert it into equity, you get the equity from day one. So that's a big no-no. Never do that. Don't ever give equity to someone, from one day to another, and so he just has that. So 5 years later, I started a new company called Conferise, and I thought, how could I, get past all this, right? And the first major achievement was convincing someone who's probably the best developer I will ever work with to work for free for a year. So, and when I talk to business leaders, out in the other sort of real established world, just ask them how many of your employees are working for free right now, and how many of them have done that for a year or more, right? And obviously no one, right? So that's actually your key role as a founder. And now that there's this developer, is a major stakeholder. And obviously he lost a year's salary he could get from someone else. But now that equity stake is on paper worth more than 1 million crowns. And that's pretty good because we're still early stage, right? So what I did was have 2 things, vesting and cliff. Don't ever forget it. 4 years vesting at least. Obviously, if or you can go down to 2 years if the other part is a good negotiator. And then a cliff, that's basically your trial. So if you pass the trial, then you start vesting, or maybe you just sort of earn the stuff you vested. And that was the way I did it. And we had one guy who shall remain unnamed, who actually passed his cliff, but turned out he was someone completely other than I thought. But because this time around I had a much longer vesting period, which was 4 years, I minimized the losses, so I didn't lose 5% out to nothing. I lost like 0.5%, right? So I became maybe 10 times better at setting this up. But really think about this stuff, because if you're serious about it, this is your capital, and this is how you really delegate ownership and get people part of your dream, and as you said, and get involved and actually have the upside. And the funny thing about vesting is that we talked about control and all that stuff. Once really stuff is negotiated and written in paper, you put that into your drawer and then you just work. You don't really think about it. So equity is not really a motivator in the day-to-day. That's building the company, turning that dream into reality. And then obviously once it gets worth something, you will make sure to find that note and get what you earned. So hopefully that's some key learning that I hopefully have shared now on video as well, and inside your mind. So please share it with someone else and make new mistakes.
But my question to you is, you said 4-year vesting. So do you do equal vesting, or do you have like a staged vesting that you get 10% the first year, 20% the second year, 40% the, like whatever stocks you have, it vests at different levels? Is that what you said, step-by-step vesting?
Yeah, equity is one, investing like that's one separate thing. Yeah. And then salary is another thing, because you can't be effective if you don't have a base salary, obviously, right? The deal I had with the first two co-founders, it was linear investing over 4 years. Okay. And then the third, the business co-founder came on board, and he's a good friend of mine, and I know he's really tough in negotiating. So he got better terms. But obviously, he just turned down a job for like 100,000 a month, right? Danish, which is a lot of money, and I pay him less than a third of that, right? So he has like a kicker, some very aggressive targets that he needs to achieve. Once you get past that, it kicks in for like 2% and then invest over a shorter period of time, right?
All the different ways experienced entrepreneurs actually figure out, and all the different nuances of it. I think we need to collect data on that. I would love to just simply see your cap table over time with all the details, and I'd like to see 100 of those, right, from different people. And then that's the kind of research I would love to do, but thanks for sharing that. It's an extremely important piece of information that we don't know.
So I just wanted to mention one thing that, it's interesting. I had almost an out-of-body experience sitting here, because I'm thinking to myself, how old am I? What year is it? And I'm thinking to myself, I've been an engaged entrepreneur since 1990. So I've had a company or companies for 23 years. And that's probably why I don't have any hair and why I'm overweight and blah, blah, blah. But, hey, I can say that with some confidence. One thing that, Hesman mentioned about equity is there's a responsibility that comes with it. Yeah. And, I know that's implied in many of the things that Saras is saying, but there's a fiduciary responsibility in taking equity, and the founders share that responsibility, the investors share that responsibility. And when you look at the birth and growth of a successful entrepreneurial venture, you have to take that fiduciary responsibility extraordinarily importantly. You have to make it a central part of what everyone is engaged to do. So you might have noticed the logo that was on my presentation. One of my companies is called Commonweal. And the notion is to create a commonwealth between the founder and the money, the founder and the funder. And I've presided, the reason why I wanted to spend time working on that issue is I've presided over so many divorces where there's a lack of synchronization between the founder and the funder. And I've spent the last 8 years figuring out a kind of a bulwark to align those incentives in those models so that the founder and the funder are in the same boat, rowing together. I got to tell you, money is a critical element to the success of many ventures. I agree with Saras, and I celebrate the organic growth entrepreneur who can start a business with no money. But there are startup periods that are inevitable in some businesses that do require external capitalization, which are usually monetized with equity. But that equity is taken with responsibility that's shared. So I would just suggest for everyone who's thinking about onboarding equity in a new project, see it as taking on the responsibility of growing your business. Because that responsibility is frankly bigger than you are.
It's a little bit on what was said concerning on synchronizing the founder with the funder. Because I tried a number of different types of investors, and I think it's very, very important to take smart money over stupid money. And because I've been, I changed my mind over time for that. Because when you're an entrepreneur and you're going into a situation where you need money, you're getting desperate. But it's going to kick you back later on. It's extremely important that you say that, because I've been preaching otherwise, and a lot of people do that. But smart investors that can be your co-worker, it's so much more worth than money is in an early stage. Especially in an early stage, I would say.
I have a question for you, Jonas. I agree with the policy and legislation being a very important part of forming an ecosystem in Denmark, which is beneficial for getting more people to be interested in entrepreneurship and willing to take the risk. But I'm born in America, and I kind of feel the difference between when I'm over there talking about entrepreneurship it's there is a other kind of motivation of in the States. There is no security net. If you, for some people, I have a Mexican part of me as well. My mom's Mexican, and some of my family members, you know, if when they start a company and it doesn't succeed, then they really have problems. And that is not really the case in Denmark. That's my hypothesis. We have this famous or infamous security net. So what is your perception about the security net and even lowering other kinds of risk, taking away all the other policies that you kind of trying to make the risk lower for new entrepreneurs? How do you feel that kind of goes together hand in hand? Is it a good or bad?
I think the relationship between the downside risk and the upside risk is extremely complicated. And I have what might be a sort of a slightly controversial view on that. I do actually believe that we have great benefits from having a very strong social system for entrepreneurship. Because what you see for instance, in the US, taking the chance as an entrepreneur is really, as you say, a chance, which would make smart people with good wages stay in their current job, because if they become entrepreneurs, well, they won't have a healthcare plan, their wife will be kicked out and their child would die, or whatever. I mean, the chances are that something bad might happen. And that might sort of have smart people option out. One of the studies that we've used when we were doing the change in bankruptcy legislation was in Japan, for instance. They had dramatic changes in bankruptcy legislation, so it was less risky to become entrepreneur, and you can see a clear shift in the people in Japan who actually became entrepreneurs. So I think actually, in my view, what we're getting with this benefit system is actually that smart people can option into this without taking too much of a risk, so it's more good for them to do it. We don't have then a lot of people who do it, but I think that is for completely different reasons.
I don't know whether it's surprisingly, but I basically totally agree with Anders, and kind of if you use the kind of the thinking of SARAS, then you say, well, in a Danish economy, kind of the barrier for affordable loss is so much better. So basically you should have more startups. And the other thing is that because you have this kind of security net, you should have an economy where you basically have kind of more aspiration for doing these kind of experiments that a startup basically is, right? So I totally agree with Anna saying. I think there's a lot of other reasons than the fact that, well, we have a strong security and high taxes and stuff like that that kind of influences our ability to create high growth startups. So I'm not kind of too fond of the whole discussion on whether it's about security, and I also have kind of said, and what is the alternative, right? Is that like kind of say, well, if you're a startup, then you get nothing? Well, that would be really, really good, right? I don't think that would work. So of course it's kind of, it could be a discussion, but basically not, and excuse me, it's not an interesting discussion because, well, you can't change it.
So having been an entrepreneur in India and then having moved to the US and working with I have a peculiar view on this, and which is really, I think you have to separate the safety net for the individual from the safety net for the venture. Right? So a lot of the problems come where the state is giving you seed money and you don't have to take a risk to start a company. That's very different from saying, I'm starting a company and if I lose, my children are going to go homeless tomorrow, right? That's a very different. So it's nice to have the safety net that ought to increase people wanting to come into entrepreneurship, but unfortunately, in a lot of economies where there is a strong safety net, there are a bunch of other regulations that go with such a safe society that come in the way. And in particular, all this extra help that is given in the very early stages, I'm not sure is useful and not counterproductive. Especially given what Jonas said, I particularly agree. I don't think it's the money. It's the fact that it's money that is not really skin in the game. Nobody cares if that money is actually lost. There is no penalty to it. really taking away risk from the seed capital. When you have an angel investor investing, they actually have something to lose. So what happens there is they keep the investments much lower, right? So they're really going to keep it to affordable loss. So that makes you more creative in the sense that when you actually have less money, you end up becoming more creative in the way you build, and a lot of stakeholders have to invest with you. That's the only way you will grow. So it's underwritten through the market and every aspect of the market, not just investors, channel partners, customers, employees. I mean, the most interesting use of equity is really not with investors at all in the US. We know actually that the role of investment is overrated, and the data is very, very clear on that. But it's all these other kinds of equity relationships, all kinds of people putting skin in the game, really, where they will lose it if they lose it, is important. So I think it's really not safety net issue, but it is how less risky are you making venturing? That's really the issue.
I've got to add a couple of things, just a few things for you to think about. So London Business School and Babson College has the GEM survey, the Global Entrepreneurship Monitor, and they talk about two factors that play out in entrepreneurial orientation: an opportunity orientation and a necessity orientation. A necessity is someone who starts a business because they need to start a business. So Uganda was the #1 nation last year on the basis of necessity. You know what was the #1 in the basis of opportunity? Denmark. The other thing I would like to point out is that, you know, I got to tell you, I hear this all the time when I'm wandering around Denmark. It's almost like a self-flagellating type of perspective. You all should be very proud of this country. A positive balance of trade, full employment, an economy that is extraordinarily tight. The tightest economy, I think, on the planet, next to Singapore, maybe. And I don't think you want to trade with Singapore. You could replace it with what we have as $14 trillion worth of debt and a $14 trillion GDP. That's not a bad trade-off. So think about the amount that you would make in a year, and you'd have to basically pay it off in debt. That's the American situation. Now, I'm very bullish on the future of America. I think that now in a time of distress, this is the time when entrepreneurs come out of the woodwork, and they are coming out of the woodwork in the US. They are also coming out of the woodwork here. So I just think
a lot of them are coming out from outside the US. Let's not
That's
forget
exactly true. Actually, 40%, according to Vivek Wadhwa, right? So, you know, I truly believe that, and I think America, frankly, it's a melting pot type of economy. The other thing I'd like to point out is that you could spend 65% of your income on taxes in Denmark and have a future, or you could come to the United States and spend 40% on your taxes and get a big military. I will tell you that Obama just distributed all the impact of the cuts from the sequestration by each state. And I looked at it because I'm actually getting involved with a Danish startup called Specialistern here. We're opening up an American division of Specialistern, and which I admire a great deal. And again, it was a function of this great culture that you have. I was keenly looking at the social services impacts, how the social safety net is going to be impacted, because we really don't have a very strong one. And there were substantial impacts, but then it showed this military base being closed and this flight wing being decommissioned and this ship not happening. I'm like, I don't know, we can lose those. You know, in the great grand scheme of things, it's a question of priorities, and you all shouldn't shirk at all the kind of benefits you have here in Denmark. Hope this doesn't get put on the Department of State website.
I just had an extremely short question. Is it a problem that we have too few entrepreneurs in Denmark, or is it a problem that we have too few successful entrepreneurs in Denmark?
The last part.
The last part. Okay, so the entrepreneurs are enough.
Yeah.
Okay.
Yeah, it's interesting, and I know we should be proud, and I think the scene has really changed the past couple of years, but can I just say that even here in my second startup, and I know I'm supposed to screw up more, according to the chart, but I think what you said about the individual risk and the company risk is two different things, but in Denmark, it's kind of funny, because if you take sort of the step outside of the, the corporate, more secure world, there's not, you might just fall and fall and fall. And now actually twice in my new company's history, even though it's doing really well at the moment, but we've had ups and downs. Twice I've been at the point, sort of in the middle of the month, I wouldn't know where to get salary for my employees, right? Once I've been at the point where I'm saying, I actually don't know how to pay rent next month, right? And actually thinking about what will happen. Will they, charge me or whatever? And actually being deep in that mindset, right? So there's still a lot to be improved in. In my mind, what we should have is like, it should be comparable, having a regular job and in creating jobs, right? And if we don't have that, who's going to create the jobs, right? And traditionally, politicians have talked to, the companies with 1,000 employees. We need 1,000 companies with just one guy, right? And or 4, yeah, right. But he's going to hire the next guy, right?
You don't want the one guy employee.
And I think, in the history of Denmark, the past 10 years, of all the companies created, I don't think there's a single one now with 1,000 employees, right? So, it's it's a different image, right? And a different picture, right? We just need to minimize the risk and be transparent about, how to do it, and which is what Accelerate is doing so well. We're part of Accelerate, by the way, and I can highly recommend it.
So Anders and I are currently working on a thesis about startup funding. So if you have any input, you're welcome to talk to us. But Peter, I was actually really interested in what you said about the there might be an over-allocation of seed capital in Denmark. And we were wondering if that could have a negative impact on later stage funding. So maybe if there is too much seed capital, maybe round A and round B might be more difficult to get for the Danish companies. I would love to get your input on that.
SARAS noticed that we weren't a lot of women in the Accelerate program. I think we were 2 out of I don't know how many. 60. And 60? Mm-hmm. And for me, and I think it's a question of time, it's the idea that an entrepreneur is someone who starts up in the weekend and in the evenings. And here we have a demographic where women, they are, everybody's quite highly educated here in Denmark, and that's around the age of 30, and that's when they have children. And then I think for a lot of women, it's just not an option to do all that weekend and evening work. So if it's important for Denmark to have more female entrepreneurs, I think you should look into giving that free time, maybe half a year, or I don't know what. It's just time that we need.
It sounds as if all the factors surrounding being an entrepreneur in Denmark are pretty good. We have good macro environment and so on. But none of you have commented on the cultural differences between us and maybe the US, and how maybe Janteloven, is that playing in on how we don't ever get further, that there are people surrounding us who are holding us back, or?
So look, America has a ethos. The Horatio Alger story played out in the culture of the U.S., the turn of the century, the immigrant entrepreneur who rags to riches, building something out of nothing. We've had a lot of success with the .com and various revolutions where we've created kind of rock star entrepreneurs and things of that nature. So it's created a story, almost an ethos of entrepreneurship that is really a good thing for us to have. But I don't believe that it's confined to American soil in any way. I honestly think that it's a function of individuals and how they are seeing entrepreneurship as part of their future. And I think fundamentally worldwide there's a transformation going on in the structure of our economies as we move from hierarchically driven, more corporate-oriented, large distribution and channel-driven models, which were built after the war to take care of the provisions of goods and services, to now a much more relational economy, much more network-driven economy, much more information-intense, where firms are getting smaller and smaller and are much more related. There's an economic structural change that's going on. I wish we had an economist on that point. I don't think that an economist has articulated that difference. Janteloven. The entrepreneurs I've met here have largely sidestepped that. Ironically, I think it's a big piece. You've forgotten what I know about Danish culture, but my impression is the entrepreneurs that I see every day are standing tall, they're standing proud, and they're certainly not jumping up and down and overly bombastic, so they're not taken down by anyone, but I don't think anyone is getting in anyone's way. I would be surprised to hear that. I'd love to see my Danish colleagues comment.
Just a quick comment on that. I've visited many countries to examine entrepreneurship, and I went to Ireland because they were really successful. I've discussed with Iceland and New Zealand, and every time you go there, they always have a story. Well, in this country, we have this thing called, and then there is something, and it's extremely close to Janteloven. So I mean, I completely agree with Ted that I think we just move on. Just a very quick comment on female entrepreneurship. I mean, there are 3 reasons why we have fewer female entrepreneurs. The main reason is choice of education. The second one is that very, very high percentage of women get employed in the public sector, and spinning out of the public sector is difficult both for men and women. And the third reason is there is a small change even within when you control these 2. So what we do about it is we really try to do role model, because we know we have analytical work that works. And we have a lot of classes. We make sure that girls participate in entrepreneurship courses. So there's a 50% participation.
Yeah, just to kind of comment on the question on the problem of having too much capital too early. That is going to be a huge problem if you're going to raise capital later on. Because the problem is that if you get too much capital too early, basically two things happen. One is that you really increase your burn rate at a really, so you actually drive up cost, right, in Ted's model. And the second thing is that you drive off cost, but you don't kind of get the value in terms of proof from the market, kind of depending. So you come to an investor and say, well, now my cost base of running this company is 5 million a year, so I need to raise 50 million in order to go with further with the company. But basically, you have kind of no proof that another kind of a new investor should invest in the company. And this is kind of in some places called what you call kind of premature scaling. So you actually kind of try to scale your company too early before you found your scalable business model. You're pushing up cost and kind of not running your company real lean. And then investors look at you and say, well, why should we invest a kind of a huge amount of money in a company that hasn't kind of proved anything? So they haven't done kind of all the co-creation part. The problem is in Denmark that when we are kind of spending a lot of money in seed and stuff like that, so then the company that actually find the scalable business model, like Jonas and Conference and Martin is going for, then at that point where you actually need to raise a great deal of money, then the money is actually run out. So we invest less money in companies that found their scalable business model, and that is kind of at least one of the. So that's basically a little bit of a structural problem. The last thing I think is say, well, we have a lot of focus on money and investment in Denmark, but the interesting question is that money in itself is not interesting. It's kind of what money can get you, right? And I think that SARAS would use that argument. So, and you can get that in so many other ways, and that's the idea. And this is why I find the whole kind of the concept of the ecosystem and kind of how many people are willing to give back kind of concept is interesting, because basically Martin could almost run his company for free if you take aside his own salary, given that the fact that he's spending all his time. If you can get hundreds of people to commit into your company doing small bits and parts of your development and all that stuff. But the problem in Denmark is that, well, we do not have this kind of community thinking and kind of tradition for people giving back in that sense. And that's actually the big problem, I think, more than it's basically a lack of capital. So we are trying to kind of do a lot of things in terms of capital, because we don't have this kind of tradition of how do you have a community actually giving back these kind of bits and parts in building your company so it gets cheaper. And this is why we want to kind of study the concept of an ecosystem, a community, and think, well, is there other ways that if the community and the ecosystem is actually functioning better, then the kind of the cost of running the company in terms of new money in actually reduces, because, well, now you have an environment for kind of the whole co-creation and stuff like that. So
thank you for being the last questionnaire. My name is Lucy Bianco, and I actually work with creating an ecosystem in the city of Aarhus, where I work with a concept called Careware, where we try to match ideas and innovation with a mentor team. So I think it's really, really interesting to hear all the points that you have here, and I'll go back and work some more on it. My question is really challenging what is being said about the Danish system for supporting people, because I meet that a lot when I work with students and people who are thinking about making entrepreneurship in the area that Anders mentioned before, where women are working and in the public sector. They have a culture where security is really, really important. And what I hear them saying is, well, if I become an entrepreneur, maybe I will earn no money for 1 year or 2 years, and if I get unemployed or if I fail, then I will actually have to go to a much lower income than if I have been employed and become unemployed. And this is actually, so I just want to challenge the idea that we have this safety net, that people equal the safety net of entrepreneurs with the ones of employees. What do you think about that? Is that something you take into consideration, or is this not an issue?
I think one of the things that I would like to leave everybody with is to get away from the idea that the entrepreneurship, is about the entrepreneur, right? So you mentioned the women's issue, and you mentioned the women's issue, and this also speaks to the ecosystem. If we are actually building an ecosystem where people understand how entrepreneurship actually works, there are very many different ways to participate in entrepreneurship than becoming an entrepreneur yourself. Silicon Valley works because there are barber shops in Silicon Valley who kind of know how to set up a barber shop so people can make deals in it. Not that they are entrepreneurs, they're just hairstylists like anywhere else, right? So I think, you don't have time to start your own company. Look around you. What's your favorite shop in the thing? And you might have like 2 afternoons available in a week, and you can go in and say, here is something I can do. Co-create with an entrepreneur in your economy. And say, here is how, I can help you. Maybe I can build a website for you. Whatever is your talent, right? So I think each of us can actually become stakeholders and co-creators with entrepreneurs. And that's actually much more important than just the number of entrepreneurs and the number of investors, all these things that we get hung up on. So the ecosystem is truly, that's why you don't want to be teaching science only to scientists. Then you will not have a scientific economy and a technological society. It's the same thing with entrepreneurship. So I think even as women, even as people where we think we don't have the resources or we don't have the the preference or the ability or whatever, you can still be part of the entrepreneurial ecosystem if you understand equity, not just as pieces of paper, but as actually taking ownership in your economy. So it's not only people who have made it who give back, but people who have very little can put in, and that's an investment. All of us can invest. We have more than we think we have to invest. So that's the message I want to leave you guys with.